Hello, my name is Mwazomela Thurmond. I'm a local real estate agent with Berkshire Hathaway Home Services. I wanted to take this time to go over the home buying process. A lot of the times, actually sometimes, because about 70% of buyers have frozen equity, we do end up having cases where the seller is not able to buy or unable to sell in time to buy another property. So I wanted to go over the home buying guide. This is something that I'm happy to share with you. Our TOWNE REALTY works with us on these, and I just want to go over some of the important things that I think you guys should hear about if you're planning to buy a home. So what are the steps of buying a home? Number one is usually getting pre-qualified or making sure you have the finances. It's really important because it really does waste time when you look at homes and you realize you can't buy them and there's no means of getting that. It can be pretty unmotivating to experience that, on top of just the chance that you might have to up your offer or offer more than you initially planned, depending on how competitive the situation gets for you. Number two is to start the actual home search. So this is when you actually reach out to a real estate agent like myself, and we can get started on going over the paperwork and exactly what you need to be successful in the process. Number three, once you find the home you love, we'll write the contract. Number four is getting the contract ratified. So this means getting everything that you want taken care of before we close taken care of. Because once we close, everything is said and done and we've come into agreement. So the fifth thing I'm going to provide you with is a document checklist. This is going to help you prepare for closing date and how to go over the procedures to make sure that when you walk in the property, you love everything you're taking in and you're prepared to close. So the sixth thing that we do in buying a home is that we close at the title company. This can be an attorney or it can be a settlement company like RW TOWNE REALTY, who works with my company here in Oyster Point Road. There are plenty of other locations all throughout the Hampton Roads area. So now going back to step one is pre-qualification. Now this is a step that can be done online or in person, or you can call somebody. I make sure that you have all the documents ready because once you get going, it's really easy to sometimes get discouraged if you don't have everything or it takes too long to gather the documents. So what lenders usually ask for, the standard items, are as follows. Number one is the most recent pay stubs you have for each borrower. Sometimes it does make more sense for one person, even though you're a couple or related, to buy a home together, and it might make sense for one person to be on the loan and add the other person on at a later date for the sake of the financing portion. If you are a military member, we do like to have your current LES statements. For VA loans, we might request a DD-214 or copy of statement of service, W-2s for each borrowers for the past 2 years, including 1099s. If you're not a W-2 employee, you might need a 1099 so you see how much income you've made. We also ask typically for federal tax returns for the past 2 years, and this is all the pages. I know it's a long document, but we need the whole thing in order to process and make sure you qualify, because there's a whole underwriting process that goes beyond what your lender has to say when they meet with you. They'll also just ask for about 2 months worth of bank statements, including all of the checking and savings, retirements, stocks, bonds, anything that can help you sound like you have the funds. Sometimes even an insurance policy can suffice as extra funds. And they'll also ask you for a copy of your government issued ID. This could be your driver's license or anything like that. This would not usually be your military identification. Now, the whole goal of this pre-qualification process is to find out your budget, because your budget opens up the door for what is available and not available. And what you're going to have to encounter in that process is really understanding your monthly expenses. So if you can, it does help to figure out how much you usually spend and how that will be affected by your purchase of the home. A lot of the time we look at your debt to income ratio, so that's why it's important to understand your expenses. and what utilities you might have to pay for once you buy the home. This might even include HOA fees or condo association fees, which is different than what you see as the asking price. So what is the monthly mortgage payment? In definition, it's pretty much the amount you pay every month towards your mortgage. And it includes two portions. Sometimes it includes 3 or 4 depending on the type of loan you have, but usually you'll have your loan principal in there, which is the actual cost of the house, and then you have interest, which is the cost that you pay because you're borrowing. If you decide to go the mortgage route, the interest rate can vary depending on the lender, and sometimes closing costs and buy downs from the seller can actually help contribute towards your mortgage payment. Taxes also go into this payment, as well as insurance. If you are under 20% of your equity, that is usually something that you can do. You can also find that once you bought a home, the lender might not be as aware of when you can you're no longer required to pay the insurance. So you might want to keep an eye on your equity fairly early on, see and track when you can start making that payment, because as soon as you can, I would definitely go ahead and try to get that mortgage insurance off your payment. So the principal amount is the total amount of the loan given, and the interest is the money the lender or the bank charges you because you're borrowing. The taxes are based on the property, and they can change anytime. You always want to check the state websites and see if the seller also paid them ahead of time, or if you'll be making up the difference because they have not paid them. And those are all very important key questions to understand, because liens can be put on properties. Same thing goes with insurance. The insurance is something that you can kind of determine based off the home itself. You usually can have somebody come out and give you homeowner's insurance based off the home and everything that surrounds it. You'll also have mortgage insurance, and this is called PMI, private mortgage insurance. If you usually do a VA or FHA loan, very common to have that as part of your payment. So keep in mind that this does not include the expenses of maintenance or home repairs. So you definitely want to make sure you're comfortable with the initial year of costs and how you're going to account for that. So your budget is really what you are going to spend and willing to spend. I always recommend doing a little bit of a buffer, because your interest rate is usually fixed if you get a fixed mortgage rate, or you can get a variable rate, but getting a fixed rate is one of the best ways to make sure that you have an idea of what range your payment might fall in between. Keep in mind that if taxes, property insurance, or anything else changes, that's where you might see your mortgage payment increase, but it's not saying that your home is more expensive. It just costs more now to own it, which is its own thing. So here are some helpful tips to get started. I would recommend preparing a spreadsheet with your current expenses. Put in there any fixed spending and any discretionary expenses as well. Look at your credit card statements and make sure you pull maybe the last 2 to 3 months just to get an idea of what you usually spend money on. Obviously, it does not have to be perfect, but we always want to make sure we include some retirement accounts, 401ks, any stocks or anything you've picked up along the way from working different jobs, because that does happen. Occasionally we have people who had stock options from working in a certain area, and that helped them finance the home they want. So we want to subtract that monthly expense from your monthly income and get an idea of what's actually left over for you to pay towards your mortgage. The great thing about mortgages is that they have really good at making sure you can afford what you are looking for. Some people are too good, so we always want to make sure that you at least explore your options lending wise. So pretty much your monthly mortgage payment should not exceed 32% of your gross monthly income before taxes. And that can change for sure with taxes changing, but your total debt payments, your mortgage payment, your auto insurance, maybe student loans, minimum credit card payments you have to make as well, should not be exceeding 45% of your gross income. This might be the more common percentage you've heard, 45%, 40%. All of that does put it a little bit close. So that means if you have a big car payment or a lot of credit card debt, this could swing things in different ways. And so really keep in mind that these are just general rules of thumb, and borrowers will have different experiences with different lenders. And even if you went to a lender like a builder lender, they might have a whole different experience to offer you versus if you went to a traditional lender to buy a home that was available for resale. It's always smart to think about what you're going to be doing down the road. So if you can share some information about, what you plan to do maybe the next 5 to 10 years, and really just zone in on that, it can also help you decide if maybe switching your career or starting a family in the home that you buy is the best decision or not. There are about 5 key components that we take into account when it comes to your credit card debt and your credit score and how we look at your credit history. So your FICO score is the most common in America. It's calculated from different data reports, and it helps us kind of determine how much you'd be comfortable with and what your previous history indicates about your future history. So about 35% of your score is impacted by your previous payment history. So if you're paying on time, you're always good on that, you shouldn't have too much worry about that. But if you've missed some payments, that may have impacted your FICO. About 35% of that is impacted by your payment history. Now, outstanding debt is when you really get to maximizing your credit card out and you just really use as much as possible. So please, if you can, try and keep your credit card balance as close to zero as possible. Paying it off quickly and having regular consistent payments above the minimum monthly payment can help you do that for sure and look really amazing for a lender to see your history or the underwriter. When it comes to your credit history timeline, about 15% of that is impacting your credit score and your FICO score. And though it's important to have trade lines, it's also important to make sure that you are showing that you are proactive about making those payments and not letting any of those fall behind. If you pursue any new credit lines, about 10% of that might be impacted. And then when it comes to types of credit use, 10% and the different types will also affect your score. Now, going on to do's and don'ts. This is where most people end up falling and missing the house they loved, even though they did everything else correctly. Because you could beat every other offer on the market. You could come in with the strongest, most aggressive agent and just kill it and find the best house for the best price. But if you do these things I'm about to mention next, everything can go really south really quickly. So here are the do nots. Number 1, do not quit your job. Do not get a new job unless it's the same line of work with equal pay or greater. Please make sure you call your loan officer before you even consider any type of career changes while you're in the process, because once we start creating that file, it has to be ongoing and there's multiple people besides your lender who are going to be involved in the process. So you really want to make sure your file is streamlined and ready and we're not going to have any hiccups. So don't allow anybody to make any inquiries on your credit report. Do not start getting second loans and other things because that will affect your credit history, because we will see that those inquiries were done. Don't purchase an automobile. Don't do it. You can get one for free. You can have a family member buy one for you. But if you're the one that knows, hey, I need to buy a car or I'm planning to buy something, maybe have somebody else who is responsible for it in your family kind of help you with that if it's an emergency, and just hold on until after the process. Don't purchase any other real estate. Do not co-sign for any other loans. Do not apply for credit or take any additional debt. Do not apply for any credit cards anywhere, not even JCPenney, or don't just, if you can, keep it as clean as possible. Don't charge any additional debt onto any existing account, because we want to be working towards that balance being as close to zero as possible. We can't be also using the credit card and increasing that balance. And then don't start any home improvements that are not a condition of this loan. So if you can, take it easy, prepare for your new house. Here's what you should do. Just make sure you keep all your existing accounts current. So caught up on all your mortgage payments, car payments, and credit card payments. Make sure all the payments are paid before the due date or paid off or can be paid off with your new loan. If you have any problems making these payments, definitely ask your lender. Keep copies of all the pay stubs that you get, any bank statements, any asset statements, if you have stocks, all of those things, along with any statements for bills that are being paid through that loan that you're getting. You have a few different options when it comes to loans. FHA loan is quite common. It allows people to put down as little as 3.5%, and renovation loans are available, guaranteed by the Federal Housing Administration. Makes it easy for buyers to kind of get qualified for those, and the process might take about 30 to 35 days, sometimes 45, depending on availability of appraisers and that kind of thing. Of course, once your file is put in, that's when the process really starts. So you always want to make sure you put in a complete lender package. That way, it does not take as long as it could take to get qualified if you don't have everything together. This is a great option for first-time home buyers, and they usually have very flexible credit qualifications. When it comes to conventional loans, that's a little bit more common. This one is about up to 97% financing, so you can get 3% down and buy a home. It's great because it's stable and has principal payments, which really pay down the loan very quickly, a little bit faster than FHA in some cases, but you can always make extra payments to kind of help bring that down. Always make sure there's no penalties for that, but it's easy to really understand the conventional loan terms because they have so many competitive interest rates. You can find a lot of lenders willing to offer it. Some of them offer ARMs as well, which is the adjustable rate mortgage. You might want to be worried about that if you're tight on funds, because it could adjust upwards quite quickly and you might not be ready to take that financial burden on. When it comes to jumbo loans, these are loans for the amount that exceed the conforming loan limits for different places, like different counties. This usually is much more competitive when it comes to interest rates, and they have fixed and adjustable rate programs. VA loans are offered to qualified active duty veterans, reservists, and some surviving spouses, up to $1.5 million with no down payment, starting at 0% down. There's usually no costly mortgage insurance, which is nice, and flexible credit requirements. The lifetime benefit can be reused and sometimes transferred over depending on what happens with that, and backed by the U.S. Department of Veterans Affairs. So unlike FHA, which is backed by the Federal Housing Administration. Construction and renovation loans allow you to build on land and finance a lot and get some construction going. One-time closes allow you to close the loan at just one transaction, and we can do two-time closes to allow you to change the terms and features of your loan after the construction ends. The primary and secondary options also exist for construction and renovation loans. When it comes to FHA 203K, those are loans specifically for rehabbing. They allow you to do repairs and fixer-uppers, and the cash that you need is available for purchase and refinancing. So at the end of it, you can always refinance. Just like with any of these loans, you really can. Finance repairs, upgrades, and any additions. Owner-occupied only is the rule for FHA 203K, and they can be 1 to 4 units. Up to 6 months of mortgage payments are provided for financing if the home is not habitable by construction or during the process. USDA loans are a different type of loan that is a little bit more common in rural areas. It's part of the Rural Housing Program or farm areas. It allows for up to 100% of financing, and they have very flexible credit amounts. Some closing costs may be financed by the loan, and some suburban areas also allow you to have USDA loans. They are backed by the U.S. Department of Agriculture. The last two loans I'm going to mention are the FHLB, the Federal Home Loan Bank, which offers down payment and closing cost assistance up to $12,500 for first-time home buyers and up to $1,500 for community partners. Owner, occupant only is who qualifies, so you cannot do this as an investor. And when it comes to the last one here, it is the NC, North Carolina, I think that might be what it stands for, I'm not sure, Housing Finance Agency. So they have income limits and property locations that apply for this with down payment assistance available. So the source of your down payment is going to be something that I'm going to ask about, that's something your lender's going to ask about, and when you buy a home, if you're buying directly from the seller, they're also going to ask about that too. So this is a huge thing. Most people finance it with either savings or a gift. They might even use proceeds from an existing home sale, as well as any of the special programs we have in the area that affect people that you may qualify for. Many nonprofit organizations also offer down payment assistance, such as the Spark program for Hampton. I'm happy to send you a list if you're interested. And then private mortgage insurance can sometimes help as a source of down payment assistance. PMI covers the bank if you stop paying your mortgage and default on your loan. So if you miss a payment, it usually costs about 1% of the outstanding loan balance, and it's usually combined with your monthly mortgage payment. So you see the cost lumped together. It can add up many thousands of dollars over the lifetime of the loan. And once you pay the 20% of your principal down on your house, you can drop that fee, thus lowering your payment. So how can a real estate agent help you? A real estate agent can provide you with knowledge and experience to help you buy a home. We pretty much hold your hand through the whole process, and you can be guaranteed that you're going to have somebody negotiating on your behalf. So when you look for a buyer's agent, like myself, or somebody who's also interested in selling, because you might be buying and selling, I do both, you want to look for somebody who is available and can offer you a wide variety of access to resources in the area. Real estate agents and their brokerages usually offer a lot of other things that you might not consider beyond the person. So, like for example, my company offers a Live Easy program, which allows a concierge service to help you with all your moving needs. We also offer some other things as well, like sometimes closing cost assistance if you get a second opinion on your mortgage. As a buyer, it's always good to make sure you understand what services are being offered by the brokerage that you choose to work with. Now, if you're internet savvy, you can always go on the website and see what's going on with the agent and get connected with them. But make sure you really ask as many questions as you can. People are here to help you understand the process. And if you never ask, we can never really help you. So if you have any questions about local school information, crime data, traffic, all these things are websites or information that I can definitely direct you to, or your real estate agent can help you find. Step 3, really, I said before, once we get qualified, once you find your agent, is to find the perfect home. So when you look at the perfect home, we always look at must-haves, would compromise, and also what's not important. Because sometimes we start out thinking, hey, I would love wood floors, but if I can't get my 2-car garage, I don't care about the wood floors. I'll put the wood floors in. So please, all these things are things we have to think about. What are you willing to sacrifice, and what do you have to have? So front yard, backyard, how many cars do you need to park? Do you need a patio or a deck? Do you really need a pool? Or are you okay with a community pool? Do you prefer having a family room and a formal dining room? Or do you want to have a living room and you're okay if all of that blends together as long as you have a bonus space upstairs for the family to watch movies? Office space, eat-in kitchens, laundry rooms, attic space, even a jacuzzi. All these things are objects that may or may not be in the home you love, and they may be something you're willing to put in later down the road or willing to live without. So I want to talk about these things. even things as simple as granite countertops versus quartz countertops. A lot of people don't realize the difference, and sometimes you might see it all the time on the internet. Come to find out, the maintenance of it is a lot more than you expected. You might decide, hey, I'm cool with granite, I don't want quartz anymore. But water views, just like that, whatever you see from your home is going to be something that reminds you of your place, and is usually the reason that people fall in love with the home is some feature about it. So I'm hoping to help you discover what that feature is. That way you can make the best decision and not have any regrets. So let's quickly go over your document checklist. I said before that you need usually the lender will ask for about 2 years of rental history or mortgage history. They'll ask for your name, address, and phone numbers of all the landlords for the past 2 years, if applicable. Same thing goes with employers. We'll ask for pay stubs for the most recent 30-day period just to get going, and any verification of any other income. So this would be child support, alimony, retirement, or Social Security award letters, past 2 years personal tax returns, or W-2s, 1099s if you're self-employed, and any copies of separation or divorce decrees are also good to have ready to go. If you've ever gone through foreclosure, we need that or an explanation of that experience. Same thing goes with bankruptcy or a discharge. We need a letter of explanation. A legible copy of the sales contract is what I'm going to prepare as a real estate agent for you. And I'm going to send that to you once we find the offer, find and accept a home and the offer goes through. We need your driver's license and military ID, possibly something like that, just to prove what you're qualifying for and who you are. And VA loan applicants will also require a statement of service from your command or a copy of your DD 214, member copy 4, so we can order your certificate of eligibility. The closing attorney name and number will also be needed. You can decide on an attorney or a title company like RW TOWNE. We also will need homeowners insurance information, as well as a check or credit card for a credit report and appraisal. Some of these things a lender can help you find. Some of these things a realtor might help you find. Some of these things you might have to call your past employer, HR department, and figure out what it was that you needed and how to get that the right way, because we need that in the right format. If you decide to refinance, something that a lender would ask for would be the current mortgage statement, a current survey if you have one, copy of the homeowner's policy, especially the declaration page, subordination, a copy of the deed, and a copy of the title policy. When it comes to choosing a settlement agent, it is pretty important that you pick the right company. These can really affect the speed of closing, and getting that paperwork in as soon as possible is really necessary. Title insurance and making sure it's transferable and that there aren't any existing issues with the lots, maybe something going back from years before that was never filed correctly with the city. All these things are things that the title company really needs to get processing right away. So as soon as you get the offer accepted, the best practice is for me to send that contract directly to the settlement agent so they can start the title search and clear the title so that we can close on time or early, which is always nice. Now, the basic timeline you can expect is, number one, first is the mortgage approval, and that once you have all of that, we would go through and start writing offers and hopefully lock in on a home. Once you have the ratified contract, by then the lender usually has locked in the interest rate as well. You then start scheduling the home inspection and the termite inspection as needed. Same thing with appraisal if needed. The notification of any outstanding conditions. So we want to make sure that if there's any issues at all, everybody has to be aware. We're talking about it. Then we're scheduling the settlement with the attorney or with the closing company. And then the last thing is congratulations, you bought a home, so we can move in. I'm happy again to send you that Live Easy program, because we do have a lot of really good services that can help you move quickly and easily. Now, the ABCs of real estate are some things I want to just go over real quick, because these are some things that you might not really fully understand the definition of, but I want to make sure that you don't feel like I just spoke them word salad or gibberish, and just give you some clear definitions, because sometimes it's just nice to know. So if you're curious what these words mean, just stick around. I'm going to mention them in the definition. The first word we're going to define here is appraisal value, appraised value. So this appraised value is the opinion of the property's fair market value based off the appraiser. And the appraiser is a third-party person. So the realtor who works with the seller will price the property. Your realtor who works with you will also usually do a CMA, and they can tell you what the property should sell for and give you some guidance on what to offer. So the appraised value is what the lender, third-party person that they recommend. They usually come out. Sometimes appraisals come in high or low. Sometimes you might need to get multiple appraisers. It can help to even sometimes get a pre-market appraisal, just so you know roughly where you might fall if you're really worried that the property might not appraise for whatever reason. Closing is another word I'm going to define next, and it has some different meanings in different states. In some states, it means that a transaction is not considered closed until all the documents are like pretty much recorded at the county office. In other states, though, closing is just when you meet at the table and you sign, and everything is signed and money exchanged hands. Sometimes closings can happen on a weekend, and it might not fully close until the following week due to some type of delay in getting all the documents. Or if somebody had a misspelling, closing can be delayed that way. Now I'm going to define condominium. A condominium is a type of ownership where the real estate is partially owned by the owner, but common areas and the buildings together might be owned jointly. So this usually sometimes covers insurance for the outside of the building, but you'd still need insurance for the inside of the building, because that's what you technically manage and have ownership of. A contingency is something that must be met before the contract is legally binding. I mentioned before that contingencies can pop up, such as contingency on home inspection or appraisal, but sometimes it can also be contingent on other home selling. So anything that you want to put up as a contingency can be a roadblock for the seller, because it's just one more reason you might walk away. So it's always good to really make sure that the ones that you put up really do matter, and that you are also being very competitive considering the other options the seller might have. Earnest money deposit is a deposit that is made when you write the offer. You would put the money with your settlement company. Usually they like to have a settlement company hold the money, and that is a neutral third party that just makes sure that you had some type of good faith or some seriousness about writing an offer. Earnest money deposits can range from any dollar amount, and it's just really just a deposit to count towards your purchase. It's always good to make sure that you do put some money in there if you feel like there's going to be a lot of offers coming in. Now, equity is the homeowner's financial interest in the property. This is how much you own outright, and the equity is the difference between the fair market value of the property, which is what it appraised for, and the amount that you still owe on the property that you're paying for. Flood insurance is another thing that we sometimes encounter in real estate, especially in Hampton Roads. We have so many waterways. So flood insurance just really defines that the amount that you'd have to pay based off the area's location because of the risk of flooding. And the amount is very variable. I can definitely send you some options for flood insurance, and the areas where it is needed definitely change occasionally, so it's good to keep an eye on that and make sure you have the most updated information about the flood areas. When it comes to buying real estate, sometimes people need some effort, need some help. So we do have words like grantor and grantee. A grantor is the person who is conveying interest in the property. So whenever you give something, it usually ends with an OR, grantor. And if you're a person receiving, so if you're the person receiving the property, you'd be the grantee. And you might see these terms in your paperwork. Another form of insurance that you might see or hear of is hazard insurance. Hazard insurance covers the physical damage to the property due to fire, wind, vandalism, or any other hazards. It's good to have if you just you know, really know that if something were to happen, you don't have the funds to fix it. It's always good to have insurance for that reason. Home inspection is an inspection that is done by a third party. I can recommend some people for that. And the home inspection is usually done evaluating what can be physically seen with the eyes. A satisfactory one is usually something most buyers will request. It's not mandatory, but it does give you peace of mind to know the condition and what's going on with it. It also can give you clues on what to get a specialist to inspect. The next thing I'm going to define for you guys is homeowners insurance. It is an insurance policy that combines personal liability insurance and hazard insurance. So you have coverage for everything, and it's nice and easy to make that payment all in one. So the next thing I'm going to say on here for our descriptions of definitions you're going to see is legal description. Legal description is the property description recognized by law. That is sufficient to locate and identify the property without oral testament. That means that you pretty much would say the legal description of a property is another way to describe the address, but also other ways, because there are multiple ways that we can describe where a property is located, especially if you buy land. It might not have a city address yet or a mailing address. The purchase agreement is defined as a written contract that is signed by the buyer and seller. That's when it becomes binding. When the seller and the buyer have both signed, the conditions and the terms under which the property are being sold are defined in that document, so you can see everything that we're agreeing to up front. Any changes and updates can be made with additional paperwork and having the signature and approval of both on anything moving forward to keep it valid. The second to last thing I'm going to define for you guys is Real Estate Settlement Procedures Act. It is a consumer protection law that requires lenders to give borrowers an advance notice of the closing costs. This is key because it's so easy to think, oh, I can afford the home, but the cost to buy is different than the cost of buying. So we really want to make sure, and we made this by law because people need to clearly see what they're getting themselves into. So we have this consumer document that your lender will provide you that will define exactly what you can expect to bring to the closing table. And the last definition I have for you is the right of first refusal. This is a clause in a contract that requires the owner of a property to give another party the first opportunity to buy or lease the property. So that means that you can have the first opportunity or chance to rent the property or buy it and have that option. And that kind of wraps up everything I wanted to share with you guys about the home buying process. TOWNE Realty prepared this nice brochure for me, and I was able to just kind of highlight what you guys can expect in the home buying process. If you have any questions at all about buying or selling a home in the area, I'm happy to help you any way I can, whether you're buying local, out of state, or even abroad. Berkshire Hathaway is like the #4 most influential company on the planet, so we have so many realtors that are great at what they do, and I'm happy to recommend somebody if you need help. Or you can call me at 757-645-8743. My name is Mwazomela Thurmond, and I'm a Berkshire Hathaway local real estate agent. Happy to help you any way I can, whether you're buying, selling, or renting. I'm here. Let's go. Let's make your dreams come true.